Hey traders, Nick Shaheen here, recapping January 4th, a Friday close. This was Jobs Day. We feared it, and I wish you were. It was insane. Anyway, big update. We're talking big update. Nasdaq almost up 5%. 5%. Right, so almost 1,000 points on the Dow. Probably travel points over that. Not probably, most definitely. So violent days. That's normal. With when the VIX is this high, it's not normal that we see them so often, and we're not used to seeing them, is what I'm trying to say. But if the VIX is high, that's what it means. They're expecting big moves. Boom. This is one. This one had reason, and let me walk through. All right, so Friday, very bullish day. The week, bullish. And as far as wider rally, I think the most important thing that happened today is we killed one of the worries that we usually have. So every morning I've been posting a list of worries. Today, one of them died. Okay, let me show you which one. All right, so hopefully you can read this. If you can't, I'll give you that. All right, so we still need to eliminate at least one of these problems causing the sentiment crisis that we have, right? So we have China, Powell, war of words. That died today. That died today. Okay, so today that died. Why? Because he came out and spoke, and he actually said the right things. I always knew that he was doing the right things, but he was in a war of words with Trump, and today he may have gotten over it because he said exactly what we needed to hear. Number one, he said that he is not worried about hot inflation, and he specifically cited this incredible jobs number. That should have been bad news for stocks. He said, this one report is not going to change my mind. I'm not worried about inflation, I think is what he said. From this job number. And then he said that he is indeed watching the data because he kept citing it. See, even if he didn't say it, he kept citing all the data. So he is watching the data. That's a big one. And third, which is even a more recent big one for some reason, now everybody's worried about QT, which is a tightening, which is what they do with their balance sheet. You know, they had been QE, they were buying, bloating their balance sheet. They own 40% probably of all bonds out there in the US. So they're selling them. That's tightening because money is coming out of the market to buy these bonds, and that's money that would have gone into other stuff. So that's how they tighten without raising rates. They roll out of their balance sheet. So he said that he's not going to change it now, but he's open to changing it if things change. And that before he said no, everything is on automatic cruise control. So we killed that one boogeyman. We still have several. Which brings me to next week. Next week, I think the biggest boogeyman potential, China, because we have 7th or the 8th, I think, or both days, the U.S. Delegates meeting with Chinese. I think it's low level, mid level. I don't want to insult anybody. I'm not sure who's meeting with what. People are meeting to talk about the tariffs. That's step one. That's great. So maybe we get good headlines out of there. If we get nothing, maybe we fade. I'm not sure, but. That's one thing. Also, there's the Fed meeting minutes. This is past meeting, but for some reason we obsess over what they said, exact words and all of that. But it gives us who's thinking what inside the Fed. It doesn't really matter to me, but the market scares a little bit. What matters to me is the inflation report, I think, comes out on Friday. CPI, I think. So those are important because we don't want to see a lot of inflation so that Powell doesn't change his mind again. Okay. Up until now, he's been hawkish, and then his people come out dovish. It's like, who's saying the truth here? So now he also said dovish stuff, good for stocks, okay, not combative for stocks. All right, so I have to raise one flag too. Usually when the stock market does so well, Trump says bad things. He feels comfortable to start combat, and usually he throws stuff at China. So there's that possibility for the downside. I looked at the SPX. Now, okay, so what am I looking at here? I'm looking at the S&P today. Look at this rally today. Just all the way up. If we go on a daily, probably it'll be a little messy, but I'm going to zoom in on it anyway. You can see the upside potential, right, on the daily. If they take out the recent fails, and they have been, depends where they close. That's a daily S&P chart. Then they have upside. Let me see if I have similar lines on the SPY, which is probably easier to see. Okay, simpler. There we go. This is the SPY. Everybody's used to seeing it. If they break out, depends on where they close. That's the last failure point. They should target here. I looked at the open interest. This is actual money in the market, and it's conducive for that. There's no support below it from the open interest. So if something happens, we could fall straight down to here and lower. But there's no resistance. In fact, there's upside pull towards there. There were a couple of levels, 255 from memory and 257. I put it in the write-up. So what about this, right? You remember this? Okay. I said that we would pop, drop, and drop lower than we were, and then there'll be a big rally. Well, everything was great until this second leg happened all in one day. That's the 1100 point Dow point day. I think shifted everything, may have shifted everything. So there is a chance that we may have averted setting newer lows, because my forecast included lower lows than this one, but we didn't go there. Maybe that day eliminated the possibility of it. So this could be, I'm underlining bold could, a sustainable rally. Okay, today a lot of things happened. Apple was hated yesterday. Everybody was so sure it was just death. And today it's up 3 or 4% and leading up. When markets were fading, it was catching bids. Now, there's a big gap to close. So what happens at 157 when it gets there? What happens here? That's a turning point. So I don't chase Apple calls. I may have written it. I sold puts yesterday and I shared it, and that's 20% win overnight. But this is a prior ledge, right? So I want to see what happens here. This gap, they want to close it maybe, but I'm not chasing it with calls. I'd rather be long QQQ. I mean, if Apple's rallying, this is rallying, and this looks like a neckline breaking, okay? I'd rather be long the SPY. I showed you that. Heck, Netflix, which I also shared, is in breakout 1 and filled it all today. 8%, 9%. And now it has another test. I'm just sharing stuff. I also shared NVIDIA, which also is doing well today. So up 6%. All right, so banks are important. They need to hold the rally. Why are they rallying? Because the TLT is falling. So, okay, now I'm rambling. Back to the point. Next week has potential. If I'm long, I'm staying long because my longs are out in time. If I'm short, I'm staying balanced. I don't want to be short in the face of this could be the rally. Trading wise, I share the trading and write-ups, and I'll share it again here. But today's development, again, the best thing about today is Powell. He may have changed the game as far as fear. He eliminated one thing. So this is the yield inversion fears. This is not good for stocks. It's not good for the economy, because this means that the short-term rates are getting bigger than the long-term rates, and that's yield inversion. And this takes into consideration the 2-year versus the 10-year yield. So they're coming to a point, something has got to give in here. Either that, which would be good for stock, or this, one leg and then a leg lower. Whoops, it's not going to let me do it. That would be very bad, because then we would have an inverted yield curve, and that foretells a recession, or so people believe. So self-fulfilling prophecy or not, it may come anyway. So I'm not a proponent of it. I don't think the Fed will let that happen. How can they stop that from happening? They stop ratcheting short-term rates because that's what they control, the overnight lending rate. So they have tools to do it, and they have some room to do it. So this might be done, and if indeed that's the case, then this might be the rally in the stocks. So I don't want to be too short. The only shorts I have are just a small balance. The rest I am biased long term. All right, Nick signing off. If you have any questions, let me know.